Hello traders, this is Rich from Tradesight. This is the market preview for Tuesday, March 4th, 2014. We had a down day across the board today, but really didn't see a lot of damage done other than leaving the gap open and potentially setting up for more downside. There were actually a couple of positives here where there wasn't any real immediate follow through and range expansion to the downside, and that's something that we're going to talk about in detail in just a little bit. The market internals were definitely not very good, but they also weren't disastrous. The advanced declines were minus 1,000 issues, which isn't super decisive, and the advanced declines on the Nasdaq side were only minus about 650. New York trend popped up at plus 1.58, and the VIX closed up 2 on the day, but closed well below where it opened on the first print. The first print was the first prints about the first 5 minutes were about plus 2.5. So we did pull back a decent amount from there. But definitely a couple things going on as far as price goes. So let's take a look at the pure price charts first. Let's take a look at the ES futures. All right, so here's a look at the ES futures. You can see that we had this little kind of a doji day here, but we did go to the downside. We left the gap open, but after being up the previous day, we did settle today above the open on a down day. So that gives us that contra buy signal, which implies that we're going to spend some time on Tuesday trying to fill that gap, or at least test that a little bit. Now keep in mind that the other key consideration when you do have a decent break to the downside is you want to evaluate it versus price 7 days ago. What I've done here is I just added a trend line pointing all the way back to the settlement right here from 7 days ago, and you can see that we did close at a fair distance above that day. So what that means is that while we did have a bit of a break in the market, it wasn't a real price shock where traders were scrambling to unload shares. It really seemed like they were just pulling their bids, waiting to hear some more news. Now keep in mind that this is definitely going to be a news-driven market. Absent of any news, the market tomorrow should have a little bit of an upward tilt to it, just to kind of scrounge around, at least for the first half of the session, I would think, just to see if they can perhaps fill that gap left open from Friday. The other thing to note here is that this gap does come at range high of the entire move here, and so those are gaps that the market oftentimes would like to fill, so they don't have to leave that open and worry about that. Doesn't mean it's going to happen tomorrow. It doesn't mean it's going to happen at all, but definitely something that is going to be on traders' minds. So key takeaway here is that while we did have a decent break to the downside, we did not settle below the close from 7 days ago. All right, now taking a look at the major futures just on pure price here, you can see that we did interact with the 10 EMA, but did settle above it, so we're not threatening right now to go to short-term negative. We're still positive for the time being. That gap from Friday is going to be a key consideration. If they can muster something to the upside, that's going to come in at 1857. Then above that, the high from last week, which is also Friday's candle, 1866 and a quarter, and then 1875 up top. There's going to be the other level to watch. To the downside, if we do yield and give way, obviously Monday's low, and then below that, we're going to be coming in around 1817, 1818, where the 50 DMA is currently residing for the ES futures. Moving on to the NQs, we did settle today below the 10 EMA, so it's got a little bit of a different bent than the ES. So to the downside, it will be yesterday's low, Monday's low, 36.37, and then below that, we're going to have a little bit more support here, right, just a hair below the Monday low, where we are going to interact with the previous range high, but the real level is going to come in at 6/8 at 35.94. Keep in mind here that we do have that contra candle set up. Same way here, we did have. Oh, we don't have it. Well, we do have it here. Excuse me. We had decent price action on Friday where we're holding the highs, and today we did close down on the day, but above the open. So we've got a contra candle on the NQ and the ES side. Right, so here's a look at the TLTs to see there's going to be a flight to quality. We didn't even on today's reaction get back up to range high on this move. We are tracing out a bit of a cup and handle here, as you can see on the daily, but cup's getting a little bit, the handle part of the cup's getting a little bit wide, and we're now 12 days up. So if we do print 13 days up, we're going to be right in the area of that 8/8 level, which is going to be pretty key resistance. Oil futures advanced pretty strongly on the day. Not surprising with the news. Levels to watch overhead are going to be the 8/8 level at 106 and a quarter. Still working off this 13 exhaustion buy, and then we had this little 9 down to reinforce that. But we're definitely pushing up higher here. If we do get to this 8/8 level, the one thing that's a little bit scary is that we're not really going to be in range of 13 exhaustion. So if they want to, they could take this significantly higher before we get a secret exhaustion warning. Gold futures got back up to a previous range high, more or less. Didn't quite get that full shot at the static trend line, coming in about 1360. So 1360 is going to be key resistance in gold futures if they continue to go higher. Now we've got our 13 exhaustion here, right at range low. Real nice signal there. If the price can get up and above this static trend line, we're going to have some resistance here at 1375, which is going to be the 8/8 level on the GAN box. Moving on to some of the key market internals, we did have a relatively high reading in the trend today, closing above 1.5. What that did is it did scoot our 10-day average up a little bit, but we're still well away from an oversold reading of 1.35 or more. So essentially, the market could move either way here without being encumbered by the 10-day trend, and there's still a reasonable amount of room before we get that 1.35 oversold reading, unless we get a real big spike. And when the market makes a good move, it's always prudent to take a look at the total put-call ratio to see if you're at that reversal threshold. And we did make a notable move up today. Obviously, you can see it's one of the higher readings that we've seen in the last 12 months or so, but it's not anywhere near that climactic reversal threshold of 1.25 or more, where people are just scrambling to buy puts for protection. So we don't have that to concern us just yet. The S&P TLT cross is starting to roll over a little bit more again. Doesn't really get interesting until we take out this previous low of the ratio, but you can see that we're curling down after not even coming up to challenge the previous channel here. So right now investors are still favoring bonds over equities in the current environment. Okay, now we want to take a look at the cumulative advanced declines, especially when we potentially have something in the works here for the market. So not really seeing too much to worry about just yet. The broad market side, this is the New York Stock Exchange reading right here. It's still positive. Obviously, we had a down day today, but nothing to get concerned about too yet on the bigger time frames. The one that's a little bit more concerning here is NASDAQ. It made a new nominal high on this last push, but didn't really have too much to show for it, even though the NASDAQ was getting some distance above the previous highs. So this is the one that's starting to fatigue and looking a little bit decoupled from price. So this is the one I'm going to focus on the next couple of days to see if this can really start to straighten itself out a little bit more. If this does start to roll down, and especially if this low gets taken out, that's going to be one of the signs that we're probably in for a full-on correction. That's still a number of days away, and as we always say, tops take time to form. So we'll be vigilant and stay on top of this stuff, and take it one day and one candle at a time. Here's a look at the multi-sector daily chart. You can see that there was definitely some reshuffling going on here. The semiconductors were fairly weak. The banks were fairly weak. The BKX had been weak really earlier, later last week and early this week, and it's starting to just bounce a little bit here after pulling back fairly significantly off the high. The XAU was a little bit of a safe haven, and it did park some money there today, but really wasn't a particularly great showing where they were really just rushing for it. And you can see it's still well below the previous high water mark here on the chart. So it doesn't really get interesting until that gets taken out. All right, here's a look at the individual sectors ranked from best to worst. XAU was Top Gun, a little bit of a safe haven there. The BTKs we talked about had a little bit of a bounce back. Defense index was fairly good. The consumers were definitely outperforming the market in the telecoms were pretty decent. Keep an eye on the BTK. That's 10 days up in the Comer and within shooting distance of getting a signal this week. The XL is 10 days up, and in the pharmaceutical, the DRG index is 12 days up in the Comer. So those are all things that could potentially have signals this week. Last lagger was the broker dealers on the day, pretty weak. The pharmaceuticals were weak, airlines were weak, and the oil services were pretty weak and definitely underperformed the market. The transports weren't all that bad, but definitely want to keep an eye on those and see if they can kind of hang in there for the Dow theorists and do what they should be doing at this point and providing some support for the market as these growth names get a little bit fatigued. All right, folks, keep in mind that for data this week, for the coming session Tuesday, there's really nothing to speak of, so we're really just going to be driven by the news off the tape, and especially the geopolitical stuff. Wednesday we get the ADP number, which is going to be a big number, and then Friday we're going to get the non-farm number for the month. So once we get that, when we get that February reading for the non-farm number, that's going to be a big one. So we do have some big data coming a little bit later this week, but tomorrow there's not much to speak of. Well, as always, thanks for listening. This has been Rich for Tradesight, and please, if you find these videos useful and informational, give us a thumbs up.